As I was saying earlier, you're sounding positive about the Kenyan markets picture, advising investors to now start chasing. What's your broad expectation for the NSE as we kick this year off?
Well, I think we're seeing this trend across the sub-Saharan African space, and I think we're probably seeing a macro allocation to African equities. And I think the Nairobi Stock Exchange is no exception, and started off with a real spring in its step. I'm looking for quite I think we were emerging out of a fat tail which lasted for 2 years after the fourth quarter of 2007. And I think we could see substantial headway because most of the bad news now is in the price. And I think valuations remain quite beaten up.
Well, certainly one of those support factors that stand in the spotlight, Aly-Khan, is Safaricom. It's the bellwether for the Kenyan market, and it's sitting at the 5 shilling mark. Shares in Safaricom rising, of course, after the Kenyan regulator said that 3G license fees would remain at $25 million. We know that it had been a concern for Safaricom towards the end of last year that other players may pay substantially less than they had. What's the outlook for this company moving forward, given that the playing field has somewhat leveled out now?
Well, I think they're showing everybody a clean pair of heels in 2 of the new hyper growth curves of their business. The first one is, as you mentioned, the 3G aspect, the internet. They have really, they're really way ahead of the curve, and I think investors were concerned that the regulator would try and rather unfairly, and I think the regulator is right not to have done so, to reduce the entrance charge for other players. They're not doing that. It gives Safaricom extra impetus, and they're taking every advantage of it. And I think the other aspect, which is really quite stunning as well, is the mobile wallet, is the money transfer business, where we've seen extraordinary amounts being transferred. They have 8 million subscribers on M-Pesa. That is more than all the bank accounts in Kenya. They are, in fact, a bank practically. And I think those 2 areas are what are exciting people. I think the relentless move down from the IPO price, we bottomed out at 255. We've cleaned out all the longs who wanted to be cleaned out. And it looks on the charts and on fundamentals, it looks a very strong story now.
Just taking a look at one of those factors that you've highlighted, M-Pesa. I mean, it's not to say that competition isn't threatening. Just at the end of last week, we heard Zain announce that it's expanding its Zap service to Malawi, Niger and Sierra Leone as well, challenging that M-Pesa service. I mean, how much of a challenge do you see this posing for Safaricom, where Zain has got quite a significant foothold in the Kenyan market as well?
I think, they haven't got as strong a foothold in the Kenyan market as they might have liked, but they've got a wonderful footprint across sub-Saharan Africa. And I think that's the advantage that Zain have to leverage, and leverage fast. But I think the point here is that Safaricom have aggregated so many users onto their network now. It's between, it's nearly 80% of all users are on their network. It's very difficult. You can come and take little bites out, but you can't really take a chunk out of their business now. But having said that, that's the key advantage Zain have, which they need to leverage, which is the cross-border aspect within Africa, which I think will also have a pretty strong growth curve as well. But that is, Zain are starting a little bit behind the curve. They're in a game of catch-up, and they need to play pretty quickly.
Well, talking about financial services, let's look at some of the banking players. I mean, figures from the Central Bank of Kenya in its economic review last week showed that the Kenyan banking sector is reeling from escalating non-performing loans. What's your outlook for the sector in Kenya as we progress through this year?
Well, obviously they've had to play defense. Banking is highly correlated to GDP. We've had 2 years of subpar growth. They've had to play very strong defense, and that's an environment which is not necessarily conducive for banks. But you can look over to the western side of the continent and you can see a debacle that happened, which they're now coming out of. And I think, when you look at Kenya, you have to say they've done reasonably well. Non-performing loans as a percentage have actually come down over the last 5 years from double digits to just below single digits. Obviously, there's been a little bit of an uptick. I think the banks are poised and well positioned and very attractively priced. We're in a range of Ps of 9 to 11. We have not scaled up to the extent of the other banks, so there's a low base effect. Obviously, the different banks are offering different opportunities. Standard Chartered will probably report the highest EPS expansion for last year. Equity Bank is returning to growth in 2010. So I think there's a lot of value to be picked up. But as you've said, the banking sector has been the laggard in this market rally. It might well start playing catch up around the time of first full year results.
Looking at one of the banks that's possibly going to be clinching onto some opportunity is KCB. It's been buoyed by the merger of its banking and mortgage subsidiary, and now aims to leverage off its wide branch network that it boasts on the one hand, and the financial muscle to actually finance housing projects across the region. What kind of opportunity are we looking at here, and what's your view on KCB?
I think there's a huge opportunity for KCB. They have the deepest footprint across the region, the most branches, a very attractive cost of money structure because of the deposits that they are able to marshal. And I think, you know, it's trading on a trailing P of 9. It makes it look extreme. The yield is about 5.25%. I don't think there's any downside in the stock, and I think they've established that they want to go for growth. It's all about the speed of execution, but it looks to me as a very, very low beta investment for anybody who's looking at the banking sector in East Africa right now. I particularly like housing, and I think they're making that a correct move to get into housing. There's a structural shortage all across our region, and it's really, if you look back at the statistics, it's probably the safest place for these banks to play in, I think.
Well, of course, this merger that we've seen come to the fore will enable the bank to face competition locally, I mean, including the resurgent and only remaining standalone mortgage financier, that being Housing Finance. What's your view, and what challenge do you see this posing for Housing Finance in turn?
I think Housing Finance have got a first mover advantage in that they've gone after this market now for at least 18 to 24 months. They've got a very powerful brand. It resonates amongst people. And I think also what's attractive about Housing Finance when you compare it to KCB, for example, is the low base effect. It's a much smaller bank. And I tend to find that the best returns tend to come where you see growth from a lower base. And I think Housing Finance is offering that. Plus, do not forget they've got to tie up with Equity Bank, which means they're able to lean on Equity Bank's network and probably marshal capital at reasonable rates for growth. So I quite like Housing Finance. On the charts, it looks very attractive as well. And I think Frank Ireri has really laid out his stall, and he's got a very, very good business plan going forward.